Hi guys, it's Elliot, aka the NocTrader, your friendly neighborhood swing trader, back again with another video. And today I've got another special guest with me on the Pip Talk podcast. I've got Jake Olson, another fellow Forex trader, another fellow trader, and another fellow YouTuber from Trade Connect VVS. How you doing, Blake?
I'm doing really good. Thanks for having me on.
Yeah, thanks for joining me. So how you been? How's trading going so far?
This week in particular has been absolutely excellent, especially from Tesla in particular.
Okay, yeah. Oh, you're gonna show me that later. Let's
Yes.
not go to because I know you told me about some great trades you've had on Tesla. Can you just tell us a little bit about yourself for those that don't know who you are? I've been following your YouTube channel for some time, and I really like some of the content you've been putting out. I believe both of us are one of the few channels that really goes into depths about prop firms. But before we get into that, just tell me a little bit about yourself for people who don't know who you are.
Sure. So I'm Blake. I am the head trader for VVS Academy. I've been trading for around 4 years or so, and I teach people how to trade from absolute beginners all the way up to advanced Elliott traders. And that's the main strategy I focus on is Elliott theory. And I also trade options. And when I do trade Forex, I mainly focus on the indices. NAS, US 30, SP 500 are my go-tos.
Yeah, I prefer the indices as well. I stick to the DAX just because of my time zone. I'm in the UK, so and yeah, and the FTSE is ridiculous. It's flatlined for months, so I just stick to the DAX. But you're trading. You spoke about Elliott wave. Why did you, when you started trading, why did you choose Elliott wave as your strategy of choice, or did you go through lots of different strategies before you get there? Because Elliott wave seems quite daunting at the beginning, and that's why I avoided it for so long. Because I looked at all these different strategies, and when I saw Elliott wave, I was like, this looks complicated. But how did you come to end up becoming like a expert at Elliott waves, and why did you choose that way of trading?
That's a great question. I actually didn't start out by trading Elliott Wave. I used to trade much more simpler strategies, mostly Fibonacci's.
Yeah.
While I was working at Blue Capital, which is my previous job as an educator, and then when I graduated from that, I ended up starting. One of the other educators was into Elliott Wave theory. He was really good, so that perked my interest.
Yeah.
I ended up buying this book right here, R.N. Elliott's Masterworks.
Okay.
Which has several books inside it, as well as a couple other Elliott Wave books. And eventually, let me show you this really quickly.
Yeah, go for it.
I have a little bit of a madman
Wow.
set up on my wall here of all of my Elliott Wave notes of everything I learned from that book.
Awesome.
And that's why I got into Elliott Wave. And it works so well, which is why I continue to trade it.
That's awesome. So how's your performance before you started using Elliott waves, when you were just using, what was it, just normal trend lines and Fibonacci?
So when I was using just normal trend lines, Fibonacci, very basic strategies, it was very bad, to be honest. I was losing a lot of times, and I wasn't really sure why. I learned these strategies from what I thought were really good traders, and I thought these were very consistent, very good strategies. But in the long run, they just didn't follow through for me personally. I'm definitely not saying they don't work at all. Just didn't work for me. But when I started trading Elliott Wave, I started having amazing results. That's how I was able to pass several FTMO challenges. I was able to do other trading challenges, which I'm sure we're going to talk about just a little bit, and as well. And it just works so much better than any other trading strategy that I've ever tried. Okay,
so I'm going to pose you this. This is something that I always get pushback from some of the Twitter traders that I know. Some of them traders that are friends that don't like Elliott Wave. They're always saying it's so subjective. It doesn't work. It's whenever you say 0.1 and 2 is 0.1 and 2, you just change it if it doesn't correlate with what you want to do. So what's your rebuttal to those people that say that Elliott Wave is too subjective to be to work?
That's actually an excellent question. I actually get that question all the time. The main thing that I want to point out is that no strategy is 100%, of course. And I don't claim that Elliott Wave is 100%. But what I do is when I do my very best to mark it up, and when I do make a mistake, yes, I do go back and I change things to make it right because I made a mistake. Just like any other strategy, such as smart money, ICT, all other ones, if you get something wrong, you gotta fix it. You gotta see what happened, and you gotta to adjust it in order to be more accurate for the future. And it's the exact same thing with Elliott Wave, except for it always will work as long as the rules are being followed. So you just got to keep on changing some things, and sometimes you're able to get in better trades by doing so.
Cool. Yeah, no, that's a good answer. I always just say to people, even before I kind of started really understanding Elliott Wave, I started saying to people that were asking that question, I said, I know people that use Elliott Wave consistently and they make money, and the aim of the game isn't to be the smartest guy in the room. It's to turn a profit. If you're doing trend lines, if you're doing Fibonacci, if you're doing a moon structure, some people trade the moon. Whatever you do, whatever makes money on a consistent basis, you're doing it right. That's what I say. But I was going to ask you about moving on to the prop firms. This is something that's really exploded over the last few years, and even more so this year, maybe because of COVID, maybe people got so much more time now working from home, but they've really exploded, and there's been a real industry built around all of these new prop firms emerging. Outside of FTMO, and actually let's start with FTMO. What's your thoughts on FTMO and some of the other prop firms that you've reviewed? Because I know I've seen on your channel you've reviewed quite a lot of different prop firms, and it'd be great to get your opinion on the industry as a whole, and maybe some of the bigger known ones like FTMO and 5% or whatever.
Yeah, so I'll talk about 5%ers because I mentioned it really quickly. I would love to try 5%ers, CTI. However, the reason why I have not been able to try them yet is because I trade almost 100% indices, and to my knowledge, they still don't have indices. They're still only Forex for now. I hope they change that. If they do, then I'd be happy to try those ones out. In regards to FTMO, I did my first challenge about a year ago, so I've been doing it for quite a long time now, and I was just so fascinated by the simplicity. It sounds so easy. Make 10% before losing 10%, and then make 5 before losing 10, and then now you're funded. That's all you need to do. Of course, there's a couple other little rules in there, but they're very simple and not really so intrusive. So for me, at least, I really fell in love with their structure because it was so simple and because it was so fair. I feel like any trader who's able to pass FTMO, at least in my eyes, is able to prove that they're significantly above average trader. If they're able to do that alone.
Fair enough. And did you have to change your strategy in any way to accommodate FTMO rules? Because I personally was swing trading on the 4 hours, and it meant that I would carry over into weekends, but then I had to kind of tweak it so that my trades didn't close out. Because I got into it, the only thing I don't like about FTMO is that because in the challenge stage they allow you to trade over weeks, like you can carry over the week. Then you realize once you get funded, I can't be doing what I did to win the challenge. So was that issue for you, or you trade in shorter time frames?
I actually have another fix for that. So what I'm doing, I do the same thing for the challenge and verification. I'm also a long-term trader. I hold over the weekends. I'm doing 2 more right now just to make it a 300K account.
Okay, nice.
And those ones are higher than my current funded one because I had to close before the weekend on my other one, and then of course the weekend ended up being successful. Another one, so those ones are a little higher than this one. But now what I do with my funded account is I use CTrader. And CTrader is a far better platform than MT4, especially if you're coding. If you want to learn how to, if you're coding, especially the bots that CTrader has is far superior to the EAs that MT4, MT5 has. I was able to make one myself. I'm not a coder, by the way. I don't specialize in coding. However, I was able to make an EA, a very simple one. It just automatically will close on Friday all my positions. And so now it's included for all the VVS members. That I've made myself. So it was so easy to do that. And now that I have that, I don't really have to worry about even the weekend anymore.
Okay. Awesome.
It'll just automatically close for me on my virtual server. So
that's nice. How did you learn to code that? Well, is there a book? You got another book there somewhere that taught you how to code that, or is this YouTube videos?
It actually wasn't any YouTube videos. I did a couple courses. I did a Udemy C# course. I did a couple other ones. I did some Python course as well on DataCamp. And then it was mostly just trial and error. I'm very motivated to try and fix this problem because theoretically it could save me $20,000. Like on my first payout video, I made $19,000 after the 70% split. So that was really excellent, that one. And if I had accidentally held over the weekend, the very last weekend.
Yeah.
Instead of making 19, I would have made 0. So it's
Exactly.
really worth it. So I was really
Yeah.
motivated to do that myself. I was just trial and error, basically.
That's awesome. That's a really great tool that people can access from your academy. So what about the other funded programs? I actually want to get your opinion on the whole industry as a whole as well. I know we're going to go through some of the other ones. We spoke just a little bit about 5%, which you haven't done yet, and FTMO. What's your thoughts on the prop trading ecosystem in general?
It's definitely something that you have to look into. There's a lot of them out there that at least in my opinion, they seem to be there just to get your money and not really to help you, not really to fund you. Of course, they say that they are. But there's just sometimes there's these rules for some of them that are so sneaky. I've one I can actually talk about Fidelcrest, excuse me, that I end up doing. But that one was really sneaky on, it wasn't even a rule, something in the TOS or something that was ended up making me lose, even though I passed the challenge requirement, got the 10%. Then I'll talk more about that in a little bit. But as a whole, I think there's a lot of good opportunities out there. My top two is FTMO and Enfoid. I think both of those are both really good companies.
FTMO, and what's the other one?
Enfoid.
I haven't tried that one. Okay. I'll look into them. What would you say is the good tell signs for traders to or tick box exercise, good criteria to look for when looking for a good prop trading firm to get funded with?
That's a good question. I think to look at channels such as yours and my own channel, but look at our channels, look at independent reviews. Look at reviews that aren't biased. They're just really there just to help out the traders. And to be part of maybe even a Facebook community and ask the actual community itself what the good ones are, rather than just looking at the website itself. A lot of times there's some stuff that's misleading, or it's good to get a real review for.
I always agree with that. A peer review is good.
If you had to give a telltale sign based off the website, I would say if you have to get a telltale sign on the website, usually the ones that do have challenges, those ones do tend to be better in my experience. Just because it doesn't have a challenge doesn't mean it's bad necessarily. But usually the ones that do have challenges usually are better.
More barrier to entry, I guess. So there's the harder it is to get in most of the time, the more robust it is sometimes.
Because if there's no challenge, they're usually going to weed out people a different way. Usually by just not paying or having a consistency rule or some other silly rule.
Ooh, shots fired. Go ahead. You thinking of something? Someone in a company in particular?
Well, there's quite a few companies out there that have rules like the consistency rule, or there's a margin use rule, which is with Fidelcrest in particular.
I don't want to. I always think that when the rule is too subjective, I like especially people like us that are traders, especially even you and myself that use systematic approaches. We're very systematic in our thought process. So when rules are provided that are subjective, it kind of goes against what makes us good traders as well. We need parameters, and then I want to stay within these lines. Just tell me what the rules are, and I know what margins to stay within. And when they're subjective, then it also gives creative license to not pay you out, and then they can use whatever reasoning they want. So I agree with you on that. That's one thing I always look for, like maybe having rules that are not too subjective, so that you know that you can make your claims if you pass.
That's a great point.
So what would you say is what would you say is the best approach for people that are trying to get funded? Because I'm sure you get messages all the time from people that's like, okay, I saw your video, now I want to get on it, and I'm like, okay, cool. How long have you been consistently profitable for? He's like, I just started trading.
I actually just released a video not even 24 hours ago, and I've already gotten tons of messages based off that video with that exact same question. So yes, I get that all the time.
What's the video called?
It's the FTMO payout proof, something like that. I made a new one.
Cool.
I'll be able to find it.
I put in the card in the top right hand corner.
Perfect. Thank you. So yeah, so with that one, I go into a couple tips at the very end of the video. But the main tips that I have, I'll just summarize them for you.
Yeah.
It's basically always use percentage lots. That's definitely the biggest one. A lot of people like to risk based off of how big the account is. Like, I have this big of account, therefore I'm going to use this many lots per trade. When in reality, how big is your stop loss in that trade? Is it super small? Maybe you can use a little bit more. If it's super large, you should probably not use that much leverage. So percentage lots is definitely the best way to go. And the other one I have that's really good is keep the same strategy the whole time, especially if it's losing, which is counterintuitive because of the law of averages. Everything should come back to equilibrium over time if it is a good strategy. Again, if it's not a good strategy, probably shouldn't have been using in the first place.
And that's a good one, especially keeping the same strategy. I've been guilty of that sometimes as well, where maybe I'm close to or maybe I'm not. I need to get a certain amount, and I think, okay, this is the trade that's going to take me over the edge, even though I know in my strategy I shouldn't. That's a good rule as well. The first one that you said about what was the first one you said again? You said
the percentage loss.
Percentage loss. Yeah, I found that the issue with that was everyone uses MT4. Thank God FTMO you see trader, which actually shows you the nominal value that you're. So I had to almost create either download a calculator or because I was always confused about lot sizes, and even now I'm good at maths, but when it comes to the lot sizes for MT4 and MT5, I always think, there's just one extra bit of maths I need to do. So it was great that that especially for FTMO, the FC trader, but if you have MT4, maybe you get one of those risk calculators that you can import into the platform. That's another way of measuring lots percentage.
Yeah, one word of caution, the online ones, the ones that don't go onto your actual brokers, sometimes individual brokers, especially for indices, they can have an indice might not be worth one lot equals one indice. It might be I've even seen a weird one where it's like 0.2. It's worth 0.2 of one. So
it's weird.
You really need to know that. So the online ones aren't always so good.
That's true actually. I had to make another Excel spreadsheet just to do the calculations for some of them, because you don't want to end up risking 10 times more by accident just because you didn't get the multiples right. So what trades are you in right now? What's going on with you in the markets right now? Tell me don't tell me you got Bitcoin when it was at 9K or something.
No. The only two trades I'm in right now is just Tesla and AMD. And I was in the NAS as well, but I got a feeling that it was just gonna be moving sideways for a while, and I was actually end up being accurate on that. So I decided just to not trade for a while. Which actually that's a good tip that we didn't talk about. That's a very good tip. It's okay to not trade.
Yes, the hardest part of trading, sitting on the sidelines.
Definitely.
I bet it'll be great to see some of your thought process behind one of those trades, whether it was Tesla or AMD, just to see how you came to make those trades and where your stop loss is in, and just talk through maybe some example of Elliott wave in practice.
Sure. So I can go ahead and share my screen. I can explain a little bit about Elliott wave. So let me start by talking about the Elliott wave theory, and then we can talk about the actual trade that I took. Because you definitely need to know at least the basics behind Elliott wave theory. Elliott wave theory is very, very advanced, much more advanced than Fibonacci or many other basic strategies. But let's at least know the basics before I show you the actual trade. So there's a couple things you have to know about Elliott wave theory, namely that it very much depends on the idea of fractals. So for every wave one that you should have 5 subwaves inside of it. And each of those waves have to be they have to follow very specific rules. There's 3 cardinal rules. There's more rules to Elliott wave theory, but there's 3 cardinal rules that every single way full structure wave must follow. A full structure wave, what I mean by that is going from the 0, which isn't marked, up to the 1. So it's one full wave. So inside of that wave, we have a 5-wave structure, and that 5-wave structure must follow a very particular set of rules. And so the rules in order is that the second wave here, it cannot come below the 0. So if, for example, it came down here, that would be no longer valid. This would not be a valid count anymore. And you have to remark up. You have to find another way to find an accurate way to draw your count. The second rule is that the third wave here, it cannot be the shortest wave among waves 1 itself and wave 5. Which this one, it looks like the 1 might be kind of similar, but I'll show you really quickly that it is indeed bigger than the 1. It's not bigger than the 5. It just needs to be bigger than one of the 2 waves. So as you can see now, I'm using log scale, which is why it looks a little distorted. So as you can see, wave 3 is clearly much larger. And then the last rule is that wave number 4 cannot retrace into wave number 1. So those are the 3 cardinal rules that every single wave, every single wave count must follow.
I've got a quick question. How far into this this structure could you identify that this was respecting Elliott wave theory? Because in hindsight now we can see that 1 goes to 2, but when the one's in brackets, so the 1, 2, 3, 4, when that's happening, you can't really know that that's an Elliott wave until it's fully formed, right? Or am I wrong?
You actually can. You just need to find the data before it. So you need to be able to find some sort of what's called an ABC structure, or not necessarily an ABC, just any retracement structure, which is usually an ABC. We're actually going to go over an example. It's not ABC. But you just got to find a down, up, down. And there are some more advanced rules, like I mentioned, to find where that is. But using that, theoretically, you should be able to find close to, if not exact, bottom where it should reverse.
Cool. All right. Let's continue.
Sure. So then after that, every single 2 and 4 waves, they inside of them, they either have 3 or sometimes 5 waves. The 5 waves is a very, very rare and special case. It actually happened recently on Tesla, but it's actually very, very rare. It usually has 3 waves inside of them, and it'll be one of 3 things. It'll be either a triangle, which is with the 5 wave, or it'll be a zigzag, which this is a zigzag. A zigzag is where you have just 3 waves, and where the A wave has 5. This A wave, if I were to go even smaller, again, the idea of fractals, this A should have 5 waves inside of it.
Okay.
And then the B should have 3 inside it, and the C should have 5 inside it.
Okay.
For the triangle, which I just mentioned before, every single wave must have 3 inside it for all 5 waves. And then for the flat, that's the last one. It's usually where the A wave has 3 waves inside of it, the B has 3, and the C has 5.
Awesome.
Yeah. So now I can go over the trade. I think we know at least all the basic knowledge. Actually, I'll just use this other one. I already zoomed in on it. So here's a very rare example. One of the other rules, it's not one of the cardinal rules, but one of the other rules is that wave number 2 and wave number 4, they both have to have, one of the 2 must be a zigzag and the other one cannot be a zigzag.
Okay.
So if one is a zigzag, the other one has to either be a flat or a triangle wave. So this was I've identified this as a triangle wave, which is very rare, but it's most common in 4s in comparison to 2s. So now that I've identified where approximately should finish, it might have happened a little bit lower, but not being the case here, I was able to find wave 1 right here, which I just did the sub count. Let me go ahead and zoom in a little bit more. So if we look at this wave 1 here, we can do the sub count. And I may have not gotten this wave 1 correctly. You can argue.
It's close enough, just about.
Yeah, you can argue that this 1 up here is the true 1, but sometimes the wave 1s are not necessarily the true highs.
Yeah.
They can actually be, you can have what's called an irregular B wave, which is where the wave B actually goes above, and that's only available in flats.
Okay.
So I do actually believe this is a flat, and I think I have the wave 1 correct for now. I could be proven wrong later, but at least for now I have the wave 1 here. It might actually go here, but here's how it's do the substructure for this particular structure. I would use the wave 1 here.
Yeah.
Wave 2, wave 3, wave 4, and wave 5 like this. And I have to, of course, fix the degree. This one is called the minor degree, so we want to go down by 1 degree. And then the minute is all the degrees right here.
Okay.
And then I'm able to keep track of the idea of fractals, of where am I on the most small one. And basically the general idea of Elliott theory is if you're able to go on all the way down to say the sub-minuet, which was one of the very smallest ones. It used to be the smallest down here, down the sub-minuet. and you got an entire wave wrong on sub minuet for your entry.
Yeah.
However, your TP was based off of, say, the primary really large degree.
Yeah.
Then even if you got it completely wrong, you would still be massively profitable.
Yeah.
Because of the idea of fractals, using a high degree for your exit and a small degree for your entry.
Okay, then I get you. So why didn't you, for this one, it shows where is that line between the green and red is where you entered, right?
There's actually 4 entries on here.
Okay, so why did you enter near the 1? Wouldn't you want to enter near the 2 to maximize your entry?
Yes, of course, I didn't know that was.
You didn't know. Okay, sorry.
I actually entered literally right there, so I wasn't sure if price would come down or not. I was kind of right in a way, because price did go up immediately, but of course that was temporary.
Okay, so but the stop loss was set based on where you knew the 0 was.
Yes, because that would be a violation of the rules. That's where the rules come back in. Cool. If the 2 were to break beneath the 0, then they'd be no longer valid. So that's why I have a very safe stop loss.
So the entry wasn't as important as where the stop loss was, given that you believed it was going to keep going up. You just wanted to make sure that you had small positions taken as you entered the 1s and the 2s.
Exactly. Yes.
Cool.
So there also is some other rules that you can use to try and justify your entry a little bit more and help you identify specific wave counts and to find out exactly where you are. And that's really what I've been focusing on right now.
Yeah. I've seen some other Elliott wave traders still use Fibonacci to support their Elliott wave, because apparently Fibonacci still works with Elliott wave. Is that something you do, or is that something?
There's 2 main differences between how other people trade Elliott wave and how I do. And one of them is Fibonacci's.
Okay.
Sometimes I use Fibonacci only the 50 and the 61.8. I'll only use those 2 for Fibonacci. Sometimes I use algo targets, 1.23, 1.618, and 2. Sometimes I use those just for guesses. But the best way to truly trade is to actually, if you can, watch the market as much as possible whenever you have whenever time, and just keep on updating your charts to be as accurate as possible to see where you are. Such as for Tesla right now, I expect Tesla to keep on going up a little bit farther. I think we had a 1-2. This could be a 3-4, and then we should have one more wave higher, and then we should have a down movement that should not come below our wave 1 here. It can have a pretty serious retracement. This 4 can come as low as it wants, as long as it doesn't break beneath the 1.
Okay, and so where you put that 4, is that just like a ballpark area then? Because as I said, the guys that I know that use Fibonacci, that kind of dictates in which zone that they put the 3s and the 4s and the 1s. But the way you're doing it, you're looking for a rough like motion, but that 4 is just kind of like is an estimate, or is there a specific methodology to why you put that 4 at 437 rather than 460 or 422?
So I put it at the maximum depth that it could be. It cannot be any lower than that with my current markup. If it goes lower than that, that means that I got something wrong on my chart.
Okay. All right.
So for trades on this one, I have a most recent trade here. Believe it or not, this one just with one single option entry is already up. I think it was last time I checked 3.5K.
Wow.
And it's been 2 days on just one single entry.
Awesome.
I have these ones as well.
Awesome.
This is so as long as price doesn't break beneath here, it should then go up one more time, and then it should have a bigger, higher degree retracement, and so forth, with the idea of fractals.
With the options that you trade, are you able to set stop losses, or do you have to manually exit when it goes against you?
You can, at least with Thinkorswim, which is the platform that I use. You definitely can do that. I actually tend to not set stop losses only for options. For Forex indices, I definitely use stop losses, but for options specifically, just because theoretically, again, this is only theoretically, this would never happen. If tomorrow Tesla went down to $1, and then I wouldn't necessarily get out, and then the next day it went back up to 600. I can still take out a 600. There is no such thing as getting margined as long as you're buying calls, as long as you're not selling puts.
Okay. Cool. Yeah, that makes sense. But then that wouldn't that get you into the territory of trying to bag hold a loser, hoping that it reverses?
Yeah. So sometimes it does. However, I am just it depends on the particular situation. If it
Yeah.
does happen, I usually want to get an alert. So I'll
Yeah, cool.
check the chart and see what's going on myself. And then
Yeah.
if I think that it's a loser, then I'll probably just cut losses anyways. But
Okay.
usually, when it hits stop loss, it'll usually retrace at least a little bit for my particular based on where I put these stop losses.
Yeah.
It usually retraces a little bit just in case, or it'll usually go up just a little bit and give me a little bit better exit anyway. So it's actually better than even if I was using stop loss anyway, even for options.
Yeah, that's awesome. That's great because it really gives you like, because you're not the first person that's one. I've got another friend called Wallace. I don't know if you know, follow him on Twitter. He's one of the really good Elliott Wave trader as well, and he's got some pinpoint entries in a lot of his trades just through Elliott Wave. So I've become a believer over time, because before I just thought it was nonsense, just because of the complexities of the lines drawn. But I've seen it work really well, and this is a really good example of how you can basically make pinpoint entries, and the fact that your entries don't need to be so accurate. As long as you know where your stop loss is, you can ride the wave in different motions and take several different trades all on the same stock or index.
I actually want to talk about that a little bit more.
Yeah.
This entry, this most recent one
Yeah.
here, I'll put this one for now so it's more clear. This one here, I did actually enter exactly when it crosses, exactly right there. It was not a
Awesome.
perfect entry.
It's close
There was
enough.
a little bit of drawdown, but it's very little, and then
Yeah.
it expanded very quickly. But you'll notice where I put my stop loss.
Yeah.
It's based on this red line here, which is actually based on this point. Again, the
Yeah.
4 can't come beneath the 1. That's why I put
Yeah.
my stop loss there. And
Yeah.
exactly like you were saying, perfect example. It matters all about where the stop loss is. And already, if you look at this, you can see the RR is already 3.5 to 1
That's awesome.
on the trade.
So why did you set your stop loss there? Well, because you knew that that's probably where I was going to do a zigzag on one of the fractal counts. Is that why?
No, it's actually taking advantage of the rules.
Okay.
So my stop loss was taken here because I knew that the 4 could not come beneath the 1.
Not the stop loss, your take profit.
Oh, sorry, the take profit. So the take profit isn't actually there; it's actually higher.
Oh, it's higher. You
I'm
just
not
drew
out of
that
the
just
trade
for
yet.
okay.
Yeah, I'm
So
still
you're
in
gonna
trade.
take it out of the 3.
It's just measuring the current RR. So let's
Cool.
yeah.
All right. Yeah. All right. That's awesome. So I'm guessing your take profit is gonna be at the 3, where you think the 3 is.
Yes,
Yeah.
up here, around 550. That's my first take profit,
Yeah.
which will be on this trade. Also, I did I did actually give this out on my signal service as well.
Awesome.
But it has a 7.7 to 1 RR on this one if it hits.
Yeah, that's awesome, and that's great, because with these type of trades, the strike rate doesn't even need to be great, but because it's such a you're taking such sniper entries and got such great R2Rs in these trades.
Mm-hmm. Exactly.
Yeah.
Yeah. RR is by far the most important.
Oh yeah, definitely.
If you're percentage risking, then
Yeah,
that's
yeah,
the only other thing that matters. Yeah.
definitely. Is there anything in the trading or investing space that you've been looking at and you're interested in?
That I'm interested in. I guess I'm really interested in learning more about coding within C
Yeah,
Trader. That's something I really am focusing a lot of my time on now.
yeah,
And also coding. I don't like to code algos in the sense of one click and there you go. I
yeah,
actually prefer algos that just help you manually trade.
yeah. That's cool, because I've actually started my little journey. I've got a video coming out soon, because I started looking at scripts on TradingView that other people had made, and then just give me ideas for my own strategy. And I created a strategy and I back tested it using Pine, but because I back tested it on TradingView, but because I didn't really understand Pine to the level I wanted it to, I had to manually do it. But I wanted to create like a script in Pine, but I'm still learning how to do it, so that when I create a strategy, I can formulate the rules and then it'll back test it for me without me having my own biases of, I'm not going to take this one, I'm going to take that one. Just takes all of them and sees what the risk to reward. So I'm kind of like you. I come up with a strategy and then I want to automate it so that it shows the win rate of it over a specific period of time.
Yeah, I actually learned so much more about my manual trading from creating all these algos.
Yeah.
There's actually one in particular that I was able to code a different algo from one of the other ones I've talked about. It's basically, it finds dragonflies on the market,
Yeah.
and And when used on the US 30, it's a little bit overfitted data, but I'm able to take just a $10,000 account in back testing from January 1st, 2019 till today, and it'll make over $3 million.
Wow.
And it's just one single, that's a one click button. However, again, it is a little overfitted. It wouldn't necessarily work for any time.
Okay. Yeah, I did one with inside bar. I created a momentum strategy with the inside bar. It's very simplistic. Sometimes it's the more stripped back strategies that are sometimes the best ones, because I started trying to do all these crazy things and then realizing that it was just there's too much going on. And then I stripped it back, and I had, there's 2 rules in it. You can imagine 2 rules, and it's really profitable just because the stop, once again, it's one of those trades where nothing happens for a couple of months and then you can get like a 26R return on the trade. So I think systematic strategies is probably the way to go, because it takes the emotion out of it, because you know where you're supposed to be entering, where you're supposed to be exiting, and you can take yourself out of the equation, because that's where most traders get wrong, is the human aspect of it.
Totally agree. Yeah.
Yeah.
Would you want me to show the bot really quick?
Go for it. Yeah, I'd love to see it. Yeah.
Sure. Let me give me a second to pull it up. So why'd you learn Pine instead of
I don't know. It's the first thing I came. I haven't even fully learned it yet. I've got one guy. I'm in a kind of like a trading. Sorry, I'm in like a trading community, and this guy he basically indoctrinated me and told me to learn Pine because he was using Pine. And but I think what you use C. What's the language for C Trader? Or is it just C Trader?
C Sharp.
C Sharp. Okay, C Sharp.
Yeah.
Yeah. If you send me one of the books that you used Academy, I might look into that as well, to be honest. Yeah.
I'm sorry. You look into what?
I might look into the academies that you use to learn C Sharp as well, because I'm open to. Yeah, I might learn both, to be honest. I'm really into this type of stuff now. I think you're similar to me. You go down the rabbit hole and then.
Yeah. It really just completely changes everything once you learn this kind of stuff. I've just got to pull it up now.
Have you tried the Elliott wave with the Forex? Because I believe you said that 5%, that was one of the reasons why you didn't want to do it. But I believe Elliott wave does work with Forex to some capacity. I don't know. I'm not really well versed as much as you are, but
Elliott wave works really well with Forex, as long as the time frame is, well, not the time frame necessarily, but it's an individual move. If it's a long move, for most, especially for the major and minor currency pairs, it just doesn't work so well on the large time scale. But if it is an individual move, an individual wave, you can subdivide it pretty well.
Yeah, okay.
Okay, so this is a very simple program made. It's actually included, the source code for this is actually included for everyone in VVS. And basically what I do here is you say how many lots of any of these strategies that I've coded over here. So I have dragonflies, I have dojis, engulfing, and shadow, and I have the bull and bear version of all of those. Of course, gravestones from dragonflies. And then a couple other settings for stop loss and some other technical stuff that I have. But this result right here over the course of 2 years is really good. Of course, I would take that any day of the week. However, it can actually be much better. Again, this is a little bit overfitted data, but you can actually this is when optimized, just to show you how good some algos can be. This is really just for inspirational purposes, not actually for trading. This is actually a $3 million gain. And if we look at how big this account is, it's a $10,000 account when it starts.
Wow.
It's from January 1, 2019 until today's date. So it's really, really good over that period of time. It has wins, losses, but it over the period of time, it does win. We can see the statistics of how good it is right over here.
How does where does it set your stop losses? Because I see the arrows, so the green to the green. Where would it set a stop loss?
So it basically does it. I found out this is pretty interesting. Is actually something I learned from the program that taught me this, that it's actually much, much better to have really far stop losses.
Yeah.
When intuitively you might think that small stop losses going for the big fish is really good, but it's actually best just to give it a ton of room on both sides. So I put it basically 4. It's kind of weird. I say 3.9. That's really 4 times, or really 3.9 times the distance of whatever the creator of the strategy is. So for example, we have this dragonfly here and they're taking this trade. The stop loss for this one would be 4 times the wick to wick distance down here.
All
And
right,
as
nice.
you can look at the stats over here, its win rate really is nothing impressive. Um,
Yeah, but that's
it,
what you find with some of these great strategies. The win rate's really low, but the odds that you get are ridiculous and can pay for your whole year in one or two trades sometimes.
yeah, exactly. So yeah, as you can see, it's really exactly what you said. It's you just need those couple big winners. Again, this is optimized settings, but I have created another version of this to actually use percentage lots instead of full lots, which doesn't do quite as well because it will be less
Of
overfitted then.
course, yeah, it's more realistic, I guess.
Yeah.
That's awesome. That's a great strategy. Yeah, that's really impressive. I didn't really realize how robust C Trader was in terms of what you could do from back end capability. But yeah, you've opened my eyes to some great stuff that I can start messing around with on C Trader.
Yeah, it's my favorite platform. I like it a
Awesome.
lot.
Yeah. So yeah, Blake, you mentioned VVS quite a lot of times. If you could let people know what VVS is and also what other stuff you're getting up to outside of your YouTube channel and
Yeah, so VVS, it's the name comes from diamonds, the diamond quality.
of
So if you
course,
look at if you look at the diamond quality, you know the pure perfections is on one side, and then many flaws on the other one. But VVS stands for very very slight. It's the second highest rating behind true perfection
yeah,
because we just don't want to be
too
uh,
too egotistical.
yeah. So
Yeah,
I do make mistakes still
yeah,
sometimes, but
yeah.
in the long run, it'll still be excellent. So that's where the name comes from.
Awesome.
That's why the logo is a diamond. So the company itself, though, what we mainly focus on for the full membership, we have two different options. We have signal only for people that are only looking for signals.
Mm.
That's one package. But the package that I would really suggest for people, I try to make the full membership the real best option, which is
Yeah,
where you can actually learn exactly how I teach as well as the
yeah,
other individuals that I've hired now
yeah,
to how they trade as well, and you can master Elliott Wave in addition to all the ways that they trade. You
yeah.
can be part of the community that all has the same goal, and I do focus on specifically helping you pass prop firms as well. And those are the
Cool.
main things that we focus on at VVS.
That's awesome. That's great.
Mm-hmm.
Making some other millionaires as well, or soon to
Yeah,
be millionaires. That's
yeah.
great. That's
I'll say a lot of the students have actually been funded from FTMO now as well.
that's great. That's the best testimonial to see the students that are actually passing FTMO and other prop firms. But yeah, Blake, I really appreciate you joining me on this podcast, and you've really given some great insight into both Elliott Wave, back testing through C Trader bots, and just insight into some great knowledge of how to trade in the prop trading community. I really appreciate you joining us.
Yeah, thanks so much for having me on.
All right, cheers.